Hello, in this video we will discuss the scheme of valuation in GST. GST is ad valorem tax. What is the meaning of ad valorem tax? It means it is a tax determined based on value. It is transaction based tax and the taxable event is supply. Only if you do the supply, you are liable to pay tax. If you don't do the supply, you are not liable to tax. Unlike property tax. The property tax is payable just because you hold the property. So GST is transaction based tax. Only if there is a supply, GST is payable. The relevant provision regarding valuation has been given in section 15 of the CGST Act. Let's see what section 15 is saying. The value of taxable supply is equal to transaction value. And the transaction value is defined as price actually paid or payable. Supplier and recipient are not related and the price is the sole consideration. So GST law refers to the transaction value. However, value is defined as price actually paid or payable. The term price is not defined in the GST Act. It is defined in Sale of Goods Act, which even predates Constitution. Sale of Goods Act is 1930, Constitution 1915. How the term price is defined in the Sale of Goods Act is the money consideration for sale of goods. In GST, what we will say? Money consideration for supply of goods or services or both. There is a landmark judgment by the Supreme Court regarding price in Hindustan Sugar Mill versus State of Rajasthan that the price, sale price, is not what the seller charges to sell the goods. It is what the buyer pays to purchase the goods. What is the difference between these two? The price needs to be seen from the buyer's angle and not from seller's angle. Let's take one example. That there is a sale of rupees 100. In addition to this, the seller charges 5 rupees as entry tax, 2 rupees as freight, and 5 rupees as the tax under this act to sell the goods. So whether the transaction value or the price is 100 or 100 plus entry tax 105 or 100 plus entry tax plus freight 107 or 100 plus entry tax plus freight plus tax charge under this law 112. Which is the price? Price is 112 because to complete the sale, to consummate the sale, buyer needs to pay 112. From seller's angle, the price may be 100 only because he is collecting 5 rupees to pay to the government as an entry tax, 2 rupees some transport vendor, 5 rupees is a tax on sale of goods. Therefore, price needs to be seen from the buyer's angle and not from seller's angle. That takes me to the next concept of consideration for supply. In GST law, consideration is defined, but it is not defined. What is meant by that? The definition of consideration has been given in an inclusive manner. Means it says consideration includes. It does not say what is consideration means. This is a difference between means and inclusive definition. So if you want to see what is a natural meaning of consideration, you need to refer to the Contract Act. Let's see what is summary points about the consideration. One point is important is that there should be nexus between receipt of payment and performance of the contract, that is supply. Let's take example that I insured my car with the insurance company. Insurance company charged me a premium. I paid the premium. That premium is a consideration for the insurance company. For the performance of the contract is the coverage, insurance coverage given to my car. Suppose there is an accident to the car and the insurance company paid me the amount. This payment is not a consideration because there is no supply. There is no performance of the contract. There is an accident to the car, which both of us, neither me nor insurance company wants. But something happened and I received the amount from the insurance company. That receipt of amount is not a consideration because there is no corresponding supply. It is not in return for the performance of the contract. Therefore, all receipt of money is not a consideration. You have to independently see whether the amount received is for performance of the contract. If yes, GST is payable. You should not see just the credit side of profit and loss account and pay the GST on that. You have to see whether that receipt is for a consideration to performance of the contract. Then only GST is payable. That takes me to the next concept of sole consideration. What is given in section 15 is the price is accepted, invoice price is accepted as a transaction value only if it is a sole consideration. It means something more is not flowing from buyer to the seller in respect of the sale. If anybody is interested on what is sole consideration, please refer the case law of Bombay Tire International Limited. It is extensively discussed what is the meaning of sole consideration. Let's take a case study on sole consideration. A enters into contract with B to manufacture 1000 component. The price agreed per component is 100 rupees. So the total contract price is 1 lakh. 1 lakh rupees. In addition, it has been decided that the A will supply the tool to manufacture that component. It is a general practice in automobile sector to provide jigs, fixture, tool to manufacture the component. So in the price of rupees 100, whether we need to add the amortized value of the tool notionally. In other words, is the price per component of rupees 100 is a sole consideration. See, you need to understand the difference between consideration and condition to the contract. Consideration means something in return for the performance of the contract. The condition of the contract is that something cast upon you. If you not perform, the whole contract will be frustrated. In this case, supply of tool by A to B is a condition to the contract. In other words, if A didn't supply the tools, we will say that I can't manufacture because the tool is not available to me to manufacture those 1000 component. So in this contract, the supply of tool is a condition to the contract. The whole setting of the contract is that only if you provide the tool, I will manufacture the components. It is, in other words, what A is doing, making available the infrastructure for the B to manufacture those components. So it is condition to the contract and not consideration in the contract. No deemed value is to be added in the price of the component. In GST, there is no concept of notional valuation, deemed valuation. Economy is moving on transaction value. GST is payable on transaction value. You need to understand, it's very, very important. What is the condition in the contract and what is the consideration for the contract? That takes me to the section 15 subsection 2, that what are the things to be added in the transaction price to arrive at the value. When it is to be added, when it is separately charged, remember, that is, supplier is liable to pay to someone. Buyer says that you don't pay, I will pay. You give me the invoice of rupees 10,000. In addition to this, I will pay 3,000, which you are liable to pay. I will pay that. So in this case, the transaction value is 10,000 plus 3,000. The next point is interest for late payment. In service tax regime, interest for late payment was not added in the transaction value. In GST law, this is a big change, that if there is an interest on late payment, it is to be added in the transaction value. Let's take an example that between buyer and seller, it has been decided that if you fail to pay within 30 days from the invoice date, supplier will charge rupees 100 per day. Let's assume for a moment. And there is a 5,000 rupees interest for late payment. Now this interest on late payment is not having an independent existence. You should not say that this is interest income, this is exempt income. This interest is what is given in section 15, that this interest for late payment is to be added in the transaction value. What is the meaning of this? It means the HSN, the GST rate, everything applicable to the interest is same as applied to the principal supply of that goods or services. What is given when it is to be added in the GSTR1? It is to be added, see section 8 of time of supply. It is to be added in the GSTR1 for the month in which this interest is actually received and not on accrual basis. See section 8 of the CGST Act, which is time of supply. Suppose the principal material is supplied in the month of July. Interest is received in the month of August. Then August GSTR1, this is to be added. This interest is not having a separate existence. It is not an exempt supply. It will be added to the transaction value of the principal supply and only on a receipt basis as per section 8 of the CGST Act. Then section 15 has provided that the subsidy received from the government is not to be added in the transaction value. Private subsidy is to be added in the transaction value, and the test is that subsidy should be linked to each supply. Let's take one example, that there is a company A which entered into contract with canteen service provider. It has been decided that canteen service provider will collect 25 rupees from per plate from the employee, and company A will pay rupees 75 per meal. What is the consideration in the hands of canteen service provider? 25 which he collected from the employee, and the consideration received from the third party, that is 75 rupees received from A Limited per meal. This is to be added in the consideration because it is linked to each supply of meal. Let's change the example slightly. It has been decided that 25 rupees will be collected by the canteen service provider from the employees, and A will provide all the facilities, table, chairs, kitchen equipments, everything. In addition, he will pay rupees 1 lakh rupees per month to the canteen service provider. Now this 1 lakh is not linked to each plate. This calculation of the 1 lakh is not that there are on an average 500 employees are taking a meal, etc., etc. No, this 1 lakh is not linked to each supply, each meal. Therefore, this is not to be added in the contract value. So the transaction value in this case is 25 rupees only. So the test of the subsidy is that it is to be linked to each supply. Let's take one case study on when the subsidy is to be included in the transaction value. This is a very common case that X entered into contract with Y to purchase the sugar at rupees 50 per kg. In addition to this, X will pay 5,000 rupees to Y to purchase a particular variety of seed so that the X will get a good quality of sugar. Now this 5,000 rupees, whether to be added in the transaction value, it is not, because it is not linked to per kg sugar. It may be related. This is expenses, X Limited's business expenses, but this is not to be added in the per kg of sugar because this 5,000 is an ad hoc payment. It is not linked to each supply of sugar, each kg supply of sugar. Therefore, it is not to be added in the transaction value. Incidental expenses like packing, commission, pre-delivery charges, freight, etc., etc. All this is to be added in the price to arrive at transaction value. I am again repeating, when it will be added, when it is charged separately. Anything done by the supplier before supply or at the time of supply in relation to the supply, that needs to be added in the price if not already added to arrive at the transaction value. Discounts. Already I received so many questions on discount. What is given in section 15 is that post supply discount is not to be deducted. Pre-supply discount is allowed to be deducted. If I say pre-supply discount means a discount given before supply, is it correct? Post-supply discount means a discount given after supply. Is it so simple? Life is not so simple. Then how this can be so simple? What is pre-supply discount? Is the discount announced or agreed before supply. Any discount, you may pass on the discount after supply, but it is still a pre-supply discount if it is agreed, it is decided before supply. So the test is when that discount is agreed, when that discount is announced. If that discount is agreed or announced after supply, it is not to be deducted from the transaction value. Let's take an example that it has been decided between buyer and seller. If you pay me within 30 days from the invoice date, I will give you 2% discount. This was agreed, decided before supply. So this is pre-supply discount. You will pass on this discount if that buyer pays within 30 days from the invoice date by way of a credit note. And you are allowed to deduct the GST liability, reduce the GST liability because it is still a pre-supply discount. How you will pass on? By way of a credit note, because the invoice is already raised when the principal supply is done. Now you are giving an abatement to the price. So this will be passed on by way of a credit note. And you will adjust the GST, reduce the GST liability. You are allowed to reduce the GST liability only when corresponding credit is reversed by the buyer. If he doesn't do that, you are not allowed, because government cannot be out of money. If you say that, sir, let's forget this, I have collected the GST, money is not having any color, I collected it from the buyer, he has availed the credit, I paid to the government, so I will issue only a commercial credit note. That is a different story. But if any discount is agreed, announced before supply, it is a pre-supply discount, and you are allowed to adjust, reduce the GST liability by issuing a credit note. This is the principle of discount in the GST. Let's go to the valuation method. But before that, again I am repeating, when you will go to the valuation rules, is that when section 15 fails to determine the transaction value, then only you will refer valuation rules. If the transaction value is decided in section 15 only, there is no need to refer the valuation rules. Important. This is what we discussed, when to refer the transaction, when to refer the valuation rules, when consideration is not wholly in money, when there is a supply between distinct person or related person, supply through an agent, then there are some specific business transaction like money changer, travel agent, pure agent. Important point is that when section 15 fails to determine the transaction value, you will refer the valuation rules. What is the hierarchy of the valuation rule? The hierarchy of a valuation rule is, first is open market value. If open market value is not available, then like price of like kind or quality. If price of like kind and quality is not available, then 110% of the cost price, or use any residue method. The first is open market value. Second is price of like kind or quality. Third is 110% of the cost of production or cost of purchases. And fourth is residue method. This is the hierarchy. Now, what is the open market value? The open market value is defined as full value in money between unrelated parties, that is at arm's length. This we need to compare the definition of open market value with the definition of open market value given in the Customs Act. In GST, open market value was very loosely defined. What it says, that the open market value at the same time between two unrelated persons, maybe with the same supplier with unrelated buyer, or two altogether different parties. But what is given is at the same time. What is the meaning of at the same time? Same hour, same minute, same second. See, in the cement industry, price is changing after every 30 seconds. In Customs Act, it's very particularly given that transaction value means 90 days before or 90 days after supply, after custom clearance. If there are number of prices available at or about the same time, and then the least amount is to be taken as the open market value. However, these things are missing in the GST law. So we will have a various litigation in GST law relating to the open market value. And supply of like, kind or quality means the functional characteristics, branding, quantity, quality. In short, what it means that you should not compare apple with orange. And there is a cost based and residue method. Cost based means 110% of the cost of production or cost of acquisition, or residue method. Considering the valuation principle, use the residue method. Then when, let's see rule 27 of the CGST rules. When consideration is not wholly in money, then what it says is to see what is the open market value. If the open market value is not available, then monetize the non-monetary value. Monetize the non-monetary consideration. If that is also not possible, then like, kind or quality. Else, residue method. Let's take one example regarding when consideration not wholly in money. Suppose there is a sale of mobile. The mobile is sold at rupees 20,000 and the buyer also gives his old phone. So the consideration is not wholly in money. You need to refer the open market value. That is, at what rate this mobile phone is sold if there is no exchange of the old phone. Suppose it is sold at 24,000, then the open market value is 24,000, GST is payable on 24,000. And supplies between related and distinct person. Distinct person means what? Same PAN number, different GST numbers. And first is see the open market value. If open market value is not available, then like, kind or quality. Else, seek 110% of the cost of production, cost of acquisition, or residue method. However, two proviso has been given in the rule 28 when there is a supply between distinct person. If that supply is as it is, that is, A has supplied to B, which is a distinct person having the same PAN but different GST numbers, and B supplies it to the unrelated buyer as it is, then 90% of at which B sale to the unrelated buyer will be considered as a transaction value. The next proviso is that if the full input tax credit is available, in our example, A supplies to B is a distinct persons having same PAN, different GST number. If B, the input tax credit available to the B is full, then invoice value is the transaction value. What is the meaning of full input tax credit available? It means not per transaction, not this transaction only. If B is doing some exempt supply and reversing a common credit under rule 42 or 43, then this proviso is not applicable. It is not only regarding the particular transaction. If B, I'm again repeating, if B is reversing the common credit under rule 42, then this proviso, this facility of invoice value is deemed to be the open market value is not available. It is available only if the B is having a full input tax credit. Then only the invoice value, whatever is the invoice value, is the open market value, and that is a transaction value. This is how I sum up the valuation provision. If you are having any questions regarding GST, you can send a mail to me or you can call me at my cell number 8080980684 between 9:30 to 10 p.m. Thank you.